Good morning, everybody, and welcome to Genex's first quarter FY23 investor update. I'm Craig Sainsbury, help Genex with their investor relations. With me today, James Harding, who is CEO, and Craig Francis, CFO. A little bit of housekeeping to start with. There will be a Q&A facility or Q&A chance for question and answers at the end of the presentation. Please use the Q&A facility or the chat facility at the bottom of your screen in Zoom to ask your questions, and then I'll read those out to James. Great. So James, with that, I'll hand over to you.
Yeah, thanks very much, Craig, and good morning, everybody. Thank you for making the time to join this webinar. We're delighted to be presenting this morning our results for the first quarter of this financial year. Certainly exciting times to be in the renewable energy industry, and Genex continues to be very well placed indeed to capitalise on the vast opportunities that the energy transition presents. So with that, we'll just go through a couple of introduction slides, and I'll hand over to Craig to talk through some of the numbers from the quarter. So we're continuing to build out our diverse portfolio of renewable energy and storage projects, which will culminate in 2025 in providing enough energy to power 350,000 homes and remove the equivalent of some 2 million tonnes of carbon dioxide emissions. Our projects and the map on the right, as you'll well know, the Kidston Clean Energy Hub is our flagship. It's a multiple technology site that we're developing up in North Queensland at the old Kidston Gold Mine. The 50 megawatt solar farm has been operational for a few years. Our flagship pumped hydro project is under construction, about close to halfway through. We have a 200 megawatt wind project to the south of the site, which is now really ramping up development activity, and we're looking to bring that to final investment decision at the end of next year, and up to 270 megawatts of additional solar potentially at the site, which is in early feasibility. Our first big battery project in central Queensland, the Baldercombe battery project, is in full swing construction, 50 megawatt 2-hour battery, and that looks to energize middle of next year. We announced in August that we'd acquired a really exciting, very large clean energy project in southeast Queensland at Bully Creek. That's multiple technology, large-scale battery and large-scale solar development that we'll talk about in more detail later. And finally, in New South Wales, providing geographic diversity, our Gemelong solar project is also operating. So before I hand over to Craig, just a quick update on the activities. Obviously, our two solar farms at Kidston and Gemelong been performing very well this last quarter. We have revenue of some $7.2 million in the quarter, pretty evenly split across the two solar farms. Revenue's been very strong, and that's primarily due to the very high pricing that we've seen continuing into the quarter. The Kidston Solar Farm is obviously under the long-term PPA or contract for difference arrangement with Queensland Government, and we've seen an average price of almost $130 a megawatt hour. And the Gemelong Solar Farm, which is currently merchant, has seen an average bundled price of $180 a megawatt hour, which is a combination of very strong black prices, or sort of market electricity prices, and extremely strong LGC pricing, much higher than original forecasts. As to the Kidston Hydro project, work's been progressing very well on the project. The main access tunnel underground is about 75% complete at the end of the period, and the dam construction for the Wises Dam, or the upper reservoir, is about 50% complete. We did, as we announced, hit an unexpected geological feature during the course of tunneling of the access tunnel that caused some water ingress into the tunnel. And we moved very quickly to plug the holes that were drilled. Essentially, there was a drilling machine at the face that was drilling into the tunnel and encountered this unexpected feature, which caused an ingress of water. But the holes have been plugged, the water has been evacuated from the tunnel, and I'm delighted to say that the critical path tunneling activities have restarted, and we're looking to move down into the excavation of the all-important underground powerhouse cavern in the next couple of months. So that's now on track, and as we announced at the time, our expectation at this stage is that we will still be on track to complete and energize the project at the end of 2024 calendar year. And we expect the project to be completed within the project budget. We are continuing investigations into the feature and to ensure that we can continue with the main access tunnel excavation, and we'll keep the market updated on those findings as they occur. We saw the first shipment of Andritz embedded parts. It was shipped in the quarter and has now arrived at site. So that's very welcome to see the first Andritz equipment arriving in good time for installation in the underground powerhouse once that's constructed. And PowerLink have also been progressing extremely well on the long transmission line. They've received now all the approvals, including the EPBC approval from the federal government. So the transmission line is also on track. And finally, the Baldercombe battery project, as I say, our first large battery project, on schedule for energization mid next year, starting commercial operation in the third quarter. And we've seen mobilization during this last quarter to site of the contractor CPP. They started constructing the benchworks, which will take the Tesla Megapacks, will be installed on top of it. And the upgrade works to the Burnett Highway, that's the main road, into the PowerLink substation and through to the battery, has also been completed. So we're now looking with expectation towards the supply of the Megapacks early in the new year. I'll hand over to Craig now just to talk through some of the numbers.
Thanks, James, and good morning, everybody. So just in terms of the operational performance, as James said, the solar farms continue to perform well. The total generation was 48,125 megawatt hours. Of that, 29,908 megawatt hours was from KS1 and 19,217 megawatt hours was from Gemelong. That is slightly down on the sort of P50 expectations, and the impact was a combination of factors, as is probably apparent to most. The weather has continued to be challenging with lots of wet weather in southeastern Australia, particularly impacting Gemelong. There's also been a little bit of grid and economic curtailment, which we tend to see around this time of year. Also important to remind the audience that Gemelong's generation is very seasonal. KS1 is quite consistent over the 12-month calendar year, but Gemelong has very much lower irradiance in the winter months and much higher irradiance in the summer months. So you see quite a swing in the expected performance between winter and summer. From a revenue perspective, $7.2 million of revenue, of which $3.7 million was from KS1, averaging $129 a megawatt hour. That's really taking advantage of that one-way contract for difference with the Queensland state government over the period. And on Gemelong, $3.5 million, of which $2.5 million was from black pricing, that's electricity, and $1 million from large-scale generation certificates. So Gemelong still had proportionally lower generation than KS1, but still sort of broadly 50% of the revenues, averaging $180 a megawatt hour. From a cash flow perspective, it's our best quarter yet, $2.2 million in positive cash flow from operations, and we completed the quarter with $72.5 million of cash bank. Quite a few activities on the corporate front as well, many of which I'm sure you're aware. We acquired the development rights for the 2 gigawatt Bully Creek Clean Energy Project. That's an exciting opportunity for us, which James is going to run through later in the slide pack. Importantly, we also refinanced the subordinated loan facility underpinning the solar farms, and that's been really key for us to take advantage of this. It's really good pricing and really strong revenues in the market from our 2 solar farms, and allow us to release further cash back to the corporate entity rather than sweeping more of it to debt. So what we're seeing is a much more positive impact on our cash flows available for our other operations and meeting the cost of our overheads. And thirdly, the other sort of major corporate activity was, as you're probably aware, the company received a non-binding indicative offer from a consortium of Skip Capital and Stonepeak. The first offer was received, we announced that we'd received it on the 25th of July at 23 cents. Our board rejected that offer, deeming that it wasn't in the best interest of Genex shareholders as a whole. but invited further discussions with the consortium. And we announced on the 17th of August that a revised non-binding indicative offer had been received at a price of 25 cents, and that our board was minded to recommend that to shareholders should it become a binding offer, and in the absence of a superior proposal and subject to the independent expert agreeing that it was fair and reasonable in the best interest of Genex shareholders. The engagement is continuing with the consortium. We responded to some media speculation on the 23rd of September. The engagement is continuing. We're still yet to receive a binding offer, but the engagement is good, and discussions are ongoing. We'll continue, of course, to keep the market informed as and when further developments arise on that front. And finally, important and probably most importantly, there were no lost time injuries during the quarter, and no environmental incidents. So a good quarter on that front. Just in terms of particularly the solar farm performance, as James mentioned, and as seen in the results, we're really seeing a significant increase in prices in the national electricity market, both in New South Wales and Queensland. And that's sort of been apparent since the beginning of the year, and we had that period in the final quarter of last financial year, sort of around May, June, when the market was very volatile and was suspended for a point in time. That's been driven by increase in commodity prices, coal and gas, which is raising the cost of generation for thermal generators in the market, and also some outages that we've seen as well. That chart on the right shows that the prices did peak in June, and they have come off slightly. Now, remember, these are average prices, so they'll take into account those periods of time when there's consistent $15,000 pricing for long periods of time at a time when the market was suspended. What we're seeing at the moment is prices have come off, but they have stabilised at an elevated level, and they continue to remain strong. We also tend to see weaker pricing around this time of the year when we're transitioning from winter, where you have large load from heating and low sort of solar generation, to summer, where you have the large air conditioning loads, and what we're finding is really good generation in the market and sort of lower demand, so that the pricing is generally softer around this time of the year. But that doesn't change our expectation that this elevated pricing is set to continue at least for the next 12 months, and we're looking forward to summer and having some good generation from our two plants and hopefully some good revenues. The other thing that we've been able to take advantage of, so back to the previous slide, Craig, is LGC pricing, which has just continued to move forward into positive territory. The last average pricing that we've seen is $68 in October, from sort of levels below $45 this time last year. That is being driven by what we see as sort of the move to net zero and increasing demand from particularly large industrial consumers to purchase LGCs to offset their carbon emissions. So both our plant have been able to benefit from these pricing dynamics. KS1 through the one-way contract for difference on the black pricing, and Geelong on both black and LGC pricing because it's 100% merchant. Thanks, Craig. Another sort of factor that we've observed, we had this slide in our last deck that we published in July. Another factor we've observed we've given two sort of snapshots here, the first half of 2021 and the first half of 2022. What we've seen that while pricing has increased, we've also seen volatility increasing. And that is really being driven by, as I said, these baseload outages. We've got the impact of 5-minute settlement, and obviously commodity pricing and gas pricing is driving the bidding behaviour of those generators. And so what we've seen is while prices have increased, so has volatility, and that price shape, which is essentially the business case for storage assets, has just been exacerbated over the last 12 months, which we think bodes really well for our storage assets. So just to give an example, the Boldicum revenue guidance that we've given, that sort of $11 to $15 million revenue guidance, was based on modelling we undertook in Q2 of 2021. However, since this time, we've seen the average price spread in Queensland increase by more than 200%. So we see that as significant upside for the business from our Balticum project. Obviously, the hydro is under a fixed price contract with Energy Australia, but also for our development portfolio as we look to develop more storage assets in the NEM. Thanks, Craig. So just moving on to Balticum, and I won't dwell too long on this, but just to remind the audience that, as I said, this market for storage is very exciting, and Balticum remains a really exciting prospect for us. We're looking forward to its contribution from next financial year, FY24. And the offtake structure we have with Tesla gives us direct exposure to these dynamics. So if we see a doubling of revenue from our sort of forecast guidance that we did at financial close, that's going to flow straight through to us rather than be captured by the offtake counterparty. Very, very exciting for us and very, very significant upside for the portfolio. Unlike the hydro, obviously, where there's a fixed price contract with Energy Australia. Also, just to recap that we have a fixed interest rate debt facility, fixed for construction plus 12 years. The contract for construction is a fixed price. All the currencies are fully hedged, and as James mentioned before, everything is on track. Activities are starting to ramp up at site, and we're waiting for the mega packs to arrive early next year for first energisation by the end of this financial year. I'll just hand back to James now to go through the hydro project.
Yeah, thanks, Craig. So the pumped hydro project, this slide just shows some key features of the project structure, which will probably be familiar to many. It's a long-term fixed revenue stream that's been secured by this very long, up to 30 years offtake agreement with Energy Australia. That provides a real certainty of revenue over an extended period. Again, long-term, low-cost fixed rate funding from NAIF for $610 million, and strong financial support, not just from NAIF, but other federal government agencies such as ARENA, with a $47 million grant, and CFC providing some additional funding to Genex, and of course the Queensland government that is providing close to $150 million in co-funding of the long transmission line. The contracting structure that we've developed is to appoint a joint venture of 2 tier 1 contractors, and it's a fully wrapped fixed price lump sum contract arrangement. Currencies are fully hedged as part of that EPC contract, so it's an Australian dollar contract, and the construction program continues to be, as I say, on track for energisation by the end of 2024 or the first half of financial year 25. So the status of construction was up on site last week, and it's really quite impressive, I have to say, across all areas. As I say, the access tunnel is 75% complete. We have had to deal with this water ingress event, but as I mentioned, the construction at it, so the tunnel which leads to the underground powerhouse excavation is underway again, which is very pleasing. The dam works, which you can see on the pictures there, the left-hand 2 pictures, is progressing extremely well. It's 50% completed. That's ahead of schedule. We received the first Andritz shipment at site. That's the right-hand picture there. You can see the large embedded parts, spiral casing and draft tube gates being offloaded from the trailer to the stockyard at site. So you can see the timeline across the bottom there, that we're sort of well into the, getting towards the end of the access tunnel construction. Wisers Dam halfway through. We'll be looking to start construction of or excavation of the underground powerhouse early next year. And the main deliveries of the Andritz pump turbine equipment will follow mid-year. And as I say, we're on track for commissioning and energisation by the end of 2024. In terms of our project pipeline, I mentioned that we're now fully engaged and pretty excited about our Kidston Stage 3 wind project. We've proved up the resource there. We've had extensive wind resource monitoring over the past 2 years, really. We've had a wind mast at site since the beginning of this year, and we've confirmed an excellent resource. And that's not just in terms of the wind speed itself, but it's also the profile. And you can see from the charts on the right, particularly the daily wind speed profile is inversely correlated really with solar, and very much positively correlated with demand. You can see really strong wind speeds during that evening peak in particular. And we also see the same in terms of the monthly wind speed profile across the year. Again, it inversely correlates with solar. So very interesting project, very good resource, and we've seen extremely strong interest from potential off-takers. And we are in the process of engaging with them as we speak. The transmission capacity, what we're doing is using the spare capacity of that new transmission line that PowerLink is constructing for us. And so we'll end up with wind, solar and pumped hydro all at the same location, which is exciting. We've progressed with the development approvals, EPBC approvals are all underway. And we, as I say, engaged with wind turbine suppliers and contractors right now, and with off-takers. So the idea is that we're going to bring this to final investment decision and financial close, targeting at the end of next year. And it would be fully operational then in very early 2026. I should say we have a joint development agreement in place and have done for some time with J-Power, our partners. So they're earning a 50% position in the project under that arrangement and paying a substantial amount of the development costs. So just to show where we are in the program, as I say, we've been working hard over the past 18 months or so on securing land and progressing the development approvals, and on resource monitoring and confirming the yield at that site. In the last 3 months or so, we've been very closely engaged with wind turbine suppliers. We're looking to select a preferred supplier within the next month or so, and the same with contractors. So the next step will be, once we've secured those commitments and know which turbine model we're going to go with, we can complete our layouts and we can start in earnest the grid connection studies required for the connection application. So it's all coming together now with a target for closing at the end of next year, and with a sort of just over 2-year construction. We're looking to be operational by early 26, as I say. So I mentioned we announced to the market in August a really exciting new addition to our pipeline, the approximately 2 gigawatt Bully Creek project. Bully Creek is a main substation operated by PowerLink, very close to the Queensland New South Wales interconnector, very close to the border, 330 kV connection. It's a very strong part of the network, and there are very good marginal loss factors as well that apply. So that's all very favorable for economic projects to be built at very large scale. I would say initially the focus was on a large standalone battery to ramp up from our Baldercombe battery project. And so stage 1 that we're progressing at the moment is an up to 400 megawatts, up to 4-hour standalone battery to locate into the substation. And we have also been receiving, just since we signed up the transaction really in August, we've received some very serious inbound interest from large consumers and off-takers with interest in the solar part of the project. So we're actually now seeing that our stage 1 standalone battery and stage 2, which is up to 675 megawatts initially of large-scale solar, we will probably be progressing those rather in parallel with each other, because there's such strong interest, I think underpinned by the Queensland government's recently announced policy for 70% renewable energy by 2032. So that's increased from its original plan to reach 50% by 2030. And also clearly the alignment between now federal and state governments, particularly state government in Queensland, is such that there's a very strong pressure to complete this energy transition in a short order. And we can see that this is being responded to by market participants and consumers. So very exciting project, and we think that's going to be an extremely welcome and valuable addition to our portfolio. Thanks, Craig. So just in summary, this is what our portfolio looks like in terms of time frame. 2 solar farms, been in operation for a few years. The battery project at Baldercombe is in construction, and it's a short build, so that'll be operational by middle of next year or 3rd quarter of next year. The Kidston Pumped Hydro Storage project, as I say, is coming on for halfway through construction. That will be energised at the end of 24 and operational soon thereafter. The Kidston Wind project is the next development project that we're prioritising, and we're looking to bring that to start of construction at the beginning of 2024 and completion in early 2026. And again, the Bully Creek project, which is stage one, is the battery, but followed very closely by the solar farm project, will be following in behind. So just in summary, we think that the Genex investment story is underpinned by these really strong elements. We have a diverse renewable energy and storage portfolio. So 400 megawatts of renewable energy and storage, either in operation or under construction, and a wind farm following on very close behind. So we have multiple technologies in renewables, wind and solar, multiple technologies in storage, battery and pumped hydro. And we feel that the mechanisms that we put in place really underpin the value for the group. We've got a proven track record of project execution, also in remote locations, successfully developed the 2 solar farm projects. We've secured long-term energy contracts for the bulk of our projects, which provides very secure long-term cash flows. And we have an excellent track record of developing projects on time and on budget. We've developed strong relationships with tier 1 stakeholders across both state and private sector. And we have a high degree of revenue stream certainty. So 84% of the revenue that we have in the group is contracted out to 30 years, more than 76% EBITDA margin, and very low interest rates that are locked in by long-term hedges. At the same time, we do retain exposure to what we've seen as very improved pricing over the last, during the course of this year. So the rapid rise in the electricity prices in New South Wales and Queensland, also the high LGC prices. And we see in Queensland in particular, this volatility has increased dramatically, over 200% since last year. So both solar farms, KS1 because of the one-way contract for difference, Gemlong because it's merchant, and the Baldercombe battery project, which has an underpinning contract with Tesla, but effectively operates merchant, are all poised to take advantage and deliver considerable value and earnings growth to the company. And finally, we've got an extremely exciting and strong near-term development of pipeline opportunities. The Kidston Wind project, which is first up, and then the Bully Creek battery and subsequent solar stages will give us over 2 gigawatts of capacity within the next 3 or 4 years. So taken all in all, we have a very sound operating portfolio, very valuable storage projects in construction, which will come on next year and the year after, and further storage and renewable opportunities in the near future.
Thanks, James. Thanks, Craig. And just a reminder for everybody, ask a question, please just use the Q&A facility at the bottom of the screen, and we will ask those for you. First question that we have, and I don't think this will be a great surprise for either of you, is, and there's a few questions that come on this, why would the board and company contemplate recommending the proposal for shareholders as it exists now, given a lot of the upside that you've talked about today, both in terms of Genex's assets, but also in terms of the pricing outlook for the market?
So yeah, I can take this one. So yeah, look, we obviously can't speak for the board. This is sort of a board decision, but I do want to make sort of a few observations that are sort of fed into the board's deliberations on this. The first is, I guess, the premium that was offered by the consortium. It's 85% premium to the closing price of 13.5 cents per share prior to the offer being made. I guess that the board is minded to consider, in its deliberations as to whether this is the benefit of Genex shareholders as a whole, as to what might happen should the proposal not proceed. Would the share price return back to those levels, and is that in shareholders' interest, being at such a significant premium to the trading price? Another consideration is that the company has quite good upside and a lot of potential once the hydro project comes along, but that is still 2 years away. and there is the risk of the construction of that project flowing through to shareholders, which needs to be considered. And I guess that the context of that is 25 cents in the hand today, with 100% certainty, better than the potential upside with some uncertainty and some additional risk. So that's all part of those considerations. I guess that the final thing to note is the board, we stated in our announcement that the board, should the consortium issue a binding offer, the board would be minded to recommend that, subject to no superior offer emerging from another party, and the independent expert opining that the offer is fair and reasonable in the best interest of all shareholders. And of course, the independent expert will be taking into account all of the factors that we've discussed here today: the upside of the portfolio, the future cash flow generation potential of the business, in coming to their decision as to whether the proposal is in the interest of shareholders as a whole. So all those factors put together, I think the board has arrived at that decision. But as we said earlier, we're still in discussions with the consortium. We have yet to receive a binding proposal. And I guess we'll keep the market updated as and when things develop on that front.
Thanks, Craig. Next question is just around Houston and just a little bit of the delay that you saw with that water egress coming in. With the fixed cost of construction for the project, that shelters Genex from any form of capital increases with delays or issues that you've seen during the quarter.
Yeah, look, so it's a bit complex. Obviously the EPC lump sum contract is very largely de-risked. There are some very specific exclusions which do arise. So this feature that we encountered was completely unexpected and caused water ingress at a reasonably high rate. So there is exposure for Genex to some of the cost impacts of that. As we've said, there's clearly a project budget that's been established, which includes contingency against those specific events, which are for which Genex does remain liable, and that was calculated very carefully. So our expectation is at this stage that project budget does cover for the additional costs that have been experienced for working this through. As I say, we have kicked off again or restarted the critical path tunneling activity. So that ensures that the schedule will stay on track for energization by the end of 2024 calendar year. And in terms of those additional costs, as I say, we're looking to manage those. At this stage, we expect that will be within the fully funded project budget.
Great, thank you. In terms of the wind project, a couple coming in there, how does Genex propose to fund the Houston wind project? Will that be in a similar manner to what has occurred previously with the Balticum project, or another way of financing?
Yeah, I'm happy to take that one, Craig. So yeah, the wind project is a project of significant scale, and we're developing it in partnership with J-Power 50/50. So the intended funding approach will be to project finance this project, the same as we have done with the rest of the portfolio. That involves securing project-specific debt to reduce the capital requirement from equity. There will, however, be an equity requirement, and I guess we've given thought to how we would fund that equity requirement. J-Power will obviously be looked upon. We'll be looking to them to stand their corner and fund their 50%. And that leaves us with decisions to make around the balancing 50%. I guess the experience with Balticum has been that it was quite a small project. It was a small equity check that was required in the end. And we did look at partnering and selling down an interest to maintain our exposure to the project, but reducing our capital requirement. And that the equity check size was just too small for many players to participate, and the economics didn't quite work on that project in selling down at the project level. However, with this larger scale wind project, we do see opportunity for us to access a third party coming in, or a J-Power diluting Genex, but giving us a lot of flexibility to do a deal at the project level rather than an equity issuance at shareholder level. Of course, it's a function of share price. If the share price is trading at 35 cents or 40 cents, it's something that we would look to consider, funding it ourselves. But by doing a larger scale project, it gives us flexibility at the project level to manage our equity checks, so that we're only calling upon shareholders if it makes sense as a whole, but we have options available at the project level.
Thanks, Craig. Technical question here on the K3 wind. Is there any reason why you couldn't progressively take power off each wind turbine as it's completed, or would you need to wait for the whole entire field to be completed before energisation?
Yeah, look, I think the other sort of in between. It's not necessary to wait for the complete project to be completed. There is a prospect, depending on the final layout and design, especially of the evacuation into the main substation, to put sections, so clusters of wind turbines into operation ahead of the full farm being operational. And we're looking at that very closely. Clearly, if we can get to market as early as we can, we'll do so. That assists with the economics and early revenue generation. But that will depend, as I say, on the layout of the turbines themselves and the electrical connections into the substation at Kidston.
Thanks, James. Another question for you on a technical standpoint. Has the investigation into that unexpected geological water feature been completed at K2 Hydro? And if so, what was the conclusion behind that?
Yes, no, those investigations are ongoing at the moment. So clearly we're keen to understand the exact nature and extent of that feature, and that will inform how the main access tunnel excavation will restart. And we're looking and fully expecting that it will confirm that we can restart in the same heading, so in the same direction where it's going. But that's ongoing, and we expect that to be continuing for a period of time. But we'll certainly update the market once we have conclusions from that.
Thanks. Just a reminder, if people would like to ask a question, please just use the Q&A facility at the bottom of the screen. General one for you here, James. Roughly how long between energisation of an asset, of a project, until you actually start to see commercial revenue flowing in from that project?
Yeah, that's a good question. That does depend on the nature of the project and obviously the commercial structure of offtake arrangements. So, for example, the solar farms, once energisation occurs, there's electrons start flowing, and we benefit from revenue from day one, I guess. In terms of the storage projects, I guess it's a bit different, because you're testing. It's not constant continuous flow. You're testing charge discharge, whether it's water or batteries. Again, it depends on the case itself. So for the hydro, we have a locked-in offtake arrangement with Energy Australia. We actually need, when we get paid a rental, effectively that offtake arrangement is a rental. So we will need to wait until completion, practical completion, commercial handover to Energy Australia before those rental payments start. So in terms of the hydro project, we say energisation in the second half of calendar year 2024. We'd be looking for, and commissioning and completion can be a matter of a few weeks, or can take a couple of months. So it'll be towards the end of that quarter or early in 2025.
Great. Thanks, James. Craig, that's all the questions in the queue for the moment. So James, let's hand back to you for any closing remarks.
Yeah, look, no, just really appreciate the interest. I'm always happy to provide updates to investors. Appreciate your continued support, and also do appreciate that there's some uncertainty at the moment with Genex, given the approach that has been made. But we continue to really enjoy a position where we're well placed to take advantage of the market transition. We think that the headwinds have sort of disappeared to some extent. The tailwinds behind us now, in terms of what we're doing, rolling out renewable energy projects, particularly focused on large-scale storage projects in Queensland, a market that we think we understand particularly well, and which now is underpinned by strong federal and state policy to support an accelerated transition. So we think Genex is extremely well placed to capture benefits from that. So many thanks for your interest, and look forward to talking to you again soon.